Good morning, everyone. The committee will come to order after brief opening remarks. Members will receive testimony from our witnesses today, and what a great subject and necessary and critical issue we'll be dealing with. A 2022 review of the Farm Bill, the state of credit for young, beginning, and underserved producers. So important, so critical. Before we get to our business today, but I'd like to take a moment and yield to my friend, our ranking member, the distinguished gentleman from Pennsylvania, to welcome our newest member to the Agriculture Committee.
Well, Chairman, thank you so much. It is a great honor and privilege to welcome the newest member of the House Agriculture Committee, Ms. Mayra Flores from Texas. For those of you who do not know, Congresswoman Flores has an incredible personal story. She was born in Mexico, legally immigrated to the United States, and became a U.S. citizen at 6 years old. She worked alongside her parents in cotton fields to help pay for school, became a respiratory care practitioner, and was a frontline worker during the COVID-19 pandemic, and now is a member of Congress. She's truly an American success story, and I know we will all benefit from her diverse experience and her passion for our country and the agricultural industry. So, Mayra, welcome to the committee, and I'm certainly looking forward to working with you. And with that, Mr. Chairman, I yield back.
And that statement, ranking member, goes for me as well.
Excellent.
Welcome, Ms. Flores. We're delighted to have you. I'm so excited about this hearing. This is a critical issue. We've got to make sure that we have for generations and generations to come, that we can have young and beginning farmers in place. And we've got to find and make sure we are addressing those issues. And so we're looking forward to hearing from each of you. And I want to start out by saying that it should be noted that the average age of our farmers and ranchers in this country right now is 60 years of age. That right there lets you know that this is a very important issue. It is a national and very critical issue. And we must ensure that the next generation of men and women who take the place of those who are retiring from this grand occupation called farming. I'm one of those who was a beginning farmer, growing up on my grandfather's farm. And I know the meaning of that. And this is very critical to me. And credit is one of those tools that we must make readily available. We've got to do that. Farming is expensive now. Just going out and trying to get an acre of land is right now at the $5,000 level. Just think of that. So this is why farming and ranching, they may not be what we call exact sciences, but there are ebbs and there are flows. And capital is needed throughout various times, before, during, and growing season. And now we're having such drastic weather changes, but the farming must go on. And we've got to be there with the resources to help our beginning farmers. And with that, Mr. Ranking Member, I'm going to turn it over to you for your opening statement.
All right, Chairman Scott, thank you so much for convening this important hearing to discuss credit issues in rural America. For any agricultural operation, one of the most critical relationships a farmer may have is with his or her lender. This is especially true for our young and beginning producers. Farming is capital intensive, the cost of entry is incredibly high, and can act as a barrier to entry for these new agriculturalists trying to start or grow their farm operations. Unfortunately, because of the significant financial risk, some new borrowers are unable to secure commercially available credit, which is where the critical credit programs authorized by the Farm Bill step in. Direct and guaranteed ownership and operating loans delivered by the Farm Service Agency can provide the necessary funds to start or to grow a farm operation, and set-asides for beginning farmer and ranchers ensure new operations have access to these loans. As a part of the discussion today, I hope we learn what impact inflation is having on the financial health of our farmers. The announcement yesterday showing the Consumer Price Index up 9.1%, highest rate in 41 years, has me incredibly concerned for the future of farm operations and for the ability of these credit programs to continue to provide the necessary funding for operations in this high-cost environment. For me, the measure of success of our credit programs is the ability of borrowers to utilize their loans to get their operations on solid financial footing and eventually obtain access to commercially available credit. With soaring costs, I fear we may be going the opposite direction over the next several years, and we must ensure our credit title is adequate to weather this storm. As many may know, the average age of a farmer is approaching 60 and is on an upward trend. FSA's credit programs can play a role in helping farm operations transition to the next generation, but we cannot examine them in a vacuum. Rather than simply pushing programs that allow producers to borrow more, the committee should also be looking solutions that help things cost less and reduce the reliance of young and beginning farmers on government loans. Mr. Chairman, I would like to ask unanimous consent to enter into the record a letter that I, Leader McCarthy, and 94 House members sent to President Biden on June 14th.
Without objection.
Thank you, sir. This letter identifies tangible steps the administration could take immediately to address rising farm input costs and provide regulatory certainty for our producers. Reducing these costs will help all farmers, ranchers, and eventually consumers, but those who would see the biggest positive impact would be our young and beginning farmers and producers. Many farmers and ranchers will borrow more in each growing season than the average American will borrow in their lifetime. But year in and year out, our producers take this huge financial risk because they believe in the work that they're doing. They believe in living and raising a family in rural America. And with the right combination of policies, including our credit programs, we can help our farmers feed and clothe both this nation and the world. So thank you to the witnesses who are here today, and I look forward to hearing your testimony. Mr. Chairman, I yield back.
Thank you, Ranking Member, and the Chair would request that other members submit your opening statements for the record so witnesses may begin their testimony and to ensure that there is ample time for questions. And let me welcome our three distinguished witnesses again and say thank you for taking some of your valuable time to come help us with this very, very important issue. And let me introduce our panel at this time. Our first witness today is Dr. Nathan Kaufman. And Mr. Kaufman is the branch executive vice president and economist for the Federal Reserve Bank of Kansas City. Welcome, Mr. Kaufman. And our next witness today is Ms. Dania Davey, who is a board representative for the Alcorn State University Socially Disadvantaged Farmers and Ranchers Policy Research Center. And now to introduce our third witness today, I'm pleased to yield to my good friend, the gentleman from Georgia, Mr. Austin Scott.
Thank you, Chairman. Thank you, Chairman Scott, and it's my great privilege to welcome Miss Julia Ashman of Jeffersonville, Georgia. She's a first-generation farmer. She owns Rag and Frass Farm and is testifying today on behalf of the National Young Farmers Coalition. She does a wonderful job advocating for them, and I have been to her place in Jeffersonville. And she's not originally from Georgia. I'm glad she's decided to move to the 8th District and have her farming operation there. And I think most interestingly about Julia is she actually claims to have made peace with the fire ants.
Oh.
And I know nobody
Very good.
who has been able to make that. So perhaps she could explain that from her website in a little while. Julia, we're happy to have you here today and look forward to your testimony.
I thank the gentleman, and now our fourth witness today is Mr. Willard Tillman, a member of the board of the Rural Coalition. And to introduce our fifth and final witness, I'm pleased to yield to the gentleman from Illinois, Mr. Davis.
Thank you, Mr. Chairman. It's always good to see you, and thank you, Mr. Ranking Member. I'm hoping to be in person here before this hearing is done, but I did want to take the opportunity to introduce my good friend, Adam Brown. Adam and I have been friends for over a decade. Adam is the epitome of what a young farmer should be like and how to actually, take a multi-generation operation and make it his own. Adam is a former state legislator in my home state of Illinois. He did a phenomenal job representing many areas that I've been able to represent over the last 10 years in central Illinois. Adam, it's great to see you there. I'm going to come in personally and harass you in just a few minutes, but welcome. We certainly look forward to your testimony, and I will yield back the balance of any time you've given me, Mr. Chair.
Thank you. And now I want to again just say welcome to all of our witnesses, and now we will proceed with your testimony. And our first witness will be Dr. Kaufman. Please begin when you're ready.
Well, good morning, Chairman Scott, Ranking Member Thompson, and other members of the committee. Thank you for the opportunity to testify today. My name is Nate Kaufman, and I serve as Vice President and Economist with the Federal Reserve Bank of Kansas City. In my role, I lead several Federal Reserve System efforts to track economic conditions in U.S. agriculture, with a focus on farm finances and agricultural credit conditions. Because the industry is vital to the region we serve, the Kansas City Fed is committed to understanding developments in agriculture and including perspectives from rural America in national discussions on the economy. I'm here today to share an overview of credit conditions in the U.S. farm sector, but before I begin, let me emphasize that my statement represents my views only and is not necessarily that of the Federal Reserve System or any of its representatives. Agricultural credit conditions have improved significantly the past 2 years, alongside a rebound in farm commodity prices that began in late 2020. Prior to the pandemic, the U.S. farm economy had been in a prolonged downturn. From 2013 to 2016, farm income dropped by 50% alongside sharp declines in commodity prices and elevated input costs. Although farm income increased modestly from 2016 to 2019, profits generally remained low. Measures of agricultural credit indicated that financial stress was building at a gradual pace through 2019, with increases in loan delinquencies and farm bankruptcies during that time. Despite disruptions associated with the pandemic, economic conditions in agriculture have recovered dramatically since 2019. In the initial months of the pandemic in 2020, agricultural prices had continued declining, but many of those prices began to recover later that year and remained elevated even in advance of Russia's invasion of Ukraine. By February of this year, the price of corn, for example, was 65% higher than 2 years earlier. The prices of other major crops also increased sharply alongside strengthening economic activity and reduced production in several key growing areas. In addition to higher commodity prices, robust government aid programs administered during 2020 and 2021 also provided substantial financial support for many producers. The recent rebound in farm incomes has eased much of the financial stress that had been building prior to the pandemic. Through 2020, working capital increased substantially, and borrowers remained in a strong financial position through 2021. By the end of last year, the rate of delinquent farm loans held at commercial banks dropped to 1.3%, following steady increases in prior years. The average value of farm real estate, a key indicator of financial health in the U.S. farm sector, increased by nearly 30% from the end of 2019 to the end of 2021 across the Midwestern U.S. Although agricultural prices have surged in recent years, input costs were also significantly increasing even before the war. Prior to the invasion of Ukraine, U.S. farm production expenses were expected to be 18% higher in 2022 than in 2019, The average cost of fertilizer was expected to be 43% higher. Since the invasion in February, many of these costs have continued to increase, highlighting a potential need for increased financing amid global concerns about food shortages and food price inflation. In recent months, a modest increase in farm loan interest rates has also contributed to higher production expenses, albeit to a lesser extent. Despite growing concerns about intensifying cost pressures, agricultural credit conditions have generally remained strong in recent months. Since the beginning of this year, the value of farmland in the Kansas City Fed region has increased by an additional 5% through June. Most lenders indicate that loan repayment rates have continued to rise, problem loans have remained sparse, and credit is readily available to meet borrowers' financing needs. Although economic conditions in agriculture have recovered the past 2 years and credit conditions have remained solid, the pace of improvement may be slowing. Through 2021, demand for farm operating loans declined steadily as profits expanded and producers required less financial support from lenders. In the first quarter of 2022, however, lending activity at commercial banks accelerated due to a significant increase in the size of operating loans. Looking ahead, demand for farm loans in the Kansas City Fed District is expected to rise notably, and capital spending is expected to decline in the coming months for the first time since 2020. Numerous contacts have pointed to large increases in costs associated with fertilizer, fuel, and labor as primary drivers of higher expenses and a less favorable industry outlook. To briefly summarize, uncertainty about the outlook for the U.S. agricultural economy is high and will depend significantly on global factors, particularly the war in Ukraine and the strength of global economic activity. Overall, the U.S. farm sector appears to be well positioned financially for the remainder of 2022, but some measures do appear to have softened in recent weeks, and some producers may face more substantial credit challenges than others. While the strength of farm income these past 2 years is likely to sustain credit conditions in agriculture for some time, some borrowers may face heightened financial stress in the year ahead if costs continue to rise and commodity prices ease further. This concludes my formal remarks. I'll be happy to take questions at the appropriate time.
Thank you so much, Dr. Kaufman. Next is Ms. Davy. Please begin when you're ready.
Mr. Chairman and esteemed members of the House Agriculture Committee, I'm extremely honored to have this opportunity to highlight ongoing credit access challenges Black farmers, landowners, and cooperatives continue to face despite credit access improvements in the 2018 Farm Bill. My name is Dania Davy, and I serve as a board representative of the Socially Disadvantaged Farmer and Rancher Policy Center at Alcorn State University. My legal career has afforded me the opportunity to serve rural Black Americans, starting with my Skadden Legal Fellowship at a nonprofit law firm in North Carolina, then performing outreach to socially disadvantaged farmers and ranchers in the Pigford II, Keep Siegel Garcia, and Love class action discrimination settlements, and currently through the Federation of Southern Cooperatives Land Assistance Fund, where I serve as Director of Land Retention and Advocacy. I appear before you today from the Mississippi Association of Cooperatives in Jackson, Mississippi, where our legal team is providing estate planning services via our mobile estate planning clinic, which has brought us from Opelousas, Louisiana to Jackson, and this weekend we will travel to Epps, Alabama. Along the way, we have had the opportunity to meet with many of our members, consisting of Black farmers, landowners, and cooperatives that have stewarded the Federation throughout our 55-year history. This has been a deeply enlightening experience and a timely opportunity for us to hear directly from our members, which has largely been limited to virtual meetings due to the ongoing pandemic that continues to disproportionately devastate rural Black America. This year, the Federation has hosted monthly listening sessions with our members, communities, and allied organizations, the most recent of which was focused on our members' credit access. Leading this work has given me specific insight into the deleterious impact of credit access challenges and the ongoing corresponding disproportionate debt burden, loss of land, livelihood, and legacy for rural Black America. I have spoken to a Black farmer in the Midwest who was unable to purchase the certified organic farm he sought because of the lengthy and duplicitous loan application process with his local farm service agency. Despite the farmer's ability to cash flow his proposal and extensive farm management experience, the loan officer refused to own because the officer advised the farmer that the home on the farm was too nice. A Black farmer in North Carolina shared with me that she was unable to expand her farm operations when she was discouraged from submitting her microloan application by her local FSA agent. Her loan officer advised her that she would need to collateralize her $50,000 microloan with her home, which far exceeded the microloan value. The FSA agent encouraged her to use credit cards to finance her farm instead of applying for a microloan. But perhaps the most disturbing story I've heard is from a Black rancher in Texas, who first contacted us seeking assistance when the debt relief promised last year was delayed, putting his farm operations in a devastating limbo. In our most recent conversation, he further emphasized the vulnerability of his operation due to the combination of an unrelenting drought, extremely high input costs, and the uncertainty surrounding his promised farm loan debt relief, which put him at risk of losing his farm, thereby repeating the pattern of disproportionate land loss that cost his grandfather his entire farm operation, many acres of which this farmer has dutifully recovered to keep his farm ranching legacy alive and pass it on to his children. Despite my assurances of a farm foreclosure moratorium, he referenced contemplating suicide as he has taken the heartbreaking step of initiating the liquidation of his livestock and land to avoid foreclosure. Access to credit is the lifeblood of any farm or ranch operation. Without it, no farmer can meet the demands of acquiring or accessing land, developing critical infrastructure, or purchasing inputs. The changes in credit access in the 2018 Farm Bill did not anticipate the devastation caused by the global pandemic, and thus did not go far enough to address the credit needs of farmers on the ground today. Dating as far back as Reconstruction, Black farmers have been disproportionately denied credit or provided less favorable terms, a trend that is so well documented as to be common knowledge. The longstanding history of race-based discrimination in credit access popularly resulted in the race-based class action litigation against the USDA. As one devastating consequence of disparate credit access, Black farmers have been at least 3 times more likely to lose their land compared to white farmers during the same time period. Our farmers are their community's first responders. Not only do they perform the critical feat of feeding their families and communities, they create jobs, stimulate rural economies, and lay the foundation for thriving, self-sufficient rural regions. As we review the Farm Bill and prepare for the scheduled reauthorization, we must make use of the opportunity to prevent the looming threat of loss of Black farms, land, and livelihoods that has been institutionalized by racially disparate credit access. As the farmer stories I've shared this morning have outlined, our farmers need a more flexible, transparent, and streamlined FSA loan application process. One way to do so is to simplify the first $100,000 of any farm loan in line with the existing microloan process. This will accomplish both an increased limit for microloans and position our farmers to acquire their initial inputs and establish their initial infrastructure more expeditiously. For any loans that exceed $100,000, we recommend alignment on farm ownership and farm operating loans to the farm ownership loan's $600,000 limit. There's already a process in place for evaluating a loan application's ability to cash flow up to the $600,000 limit. And with the increased cost of all inputs, we need our farmers to have access to increased operating loan amounts to remain competitive. Finally, our farmers need support and resources to develop a financial institution owned and controlled by farmers of color, which accomplishes the same rural credit access as the existing farm credit system. I humbly submit testimony. Thank you for the time.
Thank you so much, Ms. Davy. And now, Ms. Asherman, please begin when you're ready.
Thank you to the Honorable David Scott and Glenn G.T. Thompson for holding this hearing and for the opportunity to testify on this important topic. My name is Julia Asherman. I'm the owner and operator of Rag and Frass Farm, a 3-acre certified organic vegetable and specialty cut flower farm in rural central Georgia. I've been farming for the past 13 years, the last 10 of which were on my own farm. I employ 5 people, 3 full-time and 2 part-time year-round. We produce and sell 12 months a year, and I do this with no off-farm income. I'm a first-generation farmer who grew up in the city. I learned to farm by trial and error, borrowing equipment from neighbors and learning lessons the hard way. The learning curve was very steep for all aspects of the farm: production, marketing, and running a business. In 2017, I was able to purchase my land with an FSA direct ownership loan. In 2019, I used a farm credit loan to buy our home next to the farm. And last year, I used an FSA operating microloan to buy a bigger delivery vehicle. My farming story is unusual, and my written testimony includes a longer account with more specifics on the process and the barriers. If you take away one message from my testimony today, I hope it's that my experience, while a success story, highlights the roadblocks, risks, and layered complex challenges that young farmers face in accessing credit and finding secure land tenure. I'm extremely grateful for the programs that do exist. I know they are part of the reason I am farming today. When I bought my land in 2017, I had been in business and farming on it for 4 years prior. During that time, I kept detailed production and sales records. These records would become the most important factor in accessing USDA credit. I had no money for a down payment. All I had was experience and proof that it could be done. My property was marginal land with buildings in poor condition in an unpopulated rural area 2 hours away from any major markets. If any of these factors had been different, it would be unlikely that the seller would wait for me in my FSA process, which took months. The process is quite slow, with many steps going back and forth and no pre-approval options. Farmers easily lose out on potential properties by not being able to act fast. And I've known several farmers personally who have not been able to use FSA loans to purchase for this reason. Diversified farms have the additional burden of fitting our business models into a framework that wasn't designed to accommodate them. This is frustrating to the borrower and doesn't build confidence in the application process or the USDA processes in general, and is frustrating and more work for the loan officer as well. Any program that requires significant paperwork for what is essentially a gamble is not realistically geared towards being accessible to most farmers most of the year. Often the cost of wasting time in the moment is higher than the potential return down the road, and farmers are constantly forced to weigh our options this way. Some of the loan process depends on a loan agent's familiarity with the type of operation you run. Beginning farmers often do things differently than the farmers many loan officers are used to. We're more likely to be organic. We're more likely to be diversified. We're more likely to be a smaller scale with more focus on specialty crops. We're more likely to direct market. We're more likely to be women, queer, people of color, and we're more likely to be first generation. These factors impact the business model and expectations of the borrower and contribute to the shared fluency or lack thereof between the borrower and the lender. Looking back, I can see my success with USDA loans was due in large part to luck, timing, and persistence. I want to thank you for the past improvements, such as the microloan program and for increasing overall loan limits for direct farm ownership loans. I hope that you continue this work in the upcoming Farm Bill. Specifically, I ask that you establish clear processes to implement a pre-approval mechanism for FSA direct farm ownership loans so that farmers do not lose out on farm ownership opportunities. I also recommend that USDA index direct farm ownership loan limits to inflation so that farmers can bring competitive offers to the table. Lastly, Black, Indigenous, and farmers of color need equitable access to USDA programs across the board, and this is especially true with access to credit. Thank you so much for your consideration of my testimony and for listening to the voices of farmers.
And thank you, Ms. Asherman. And now, Mr. Tillman, please begin when you're ready.
Good morning. My name is Willard Tillman. I'm here as a board member of the Rural Coalition. Chairman Scott, Ranking Member Thompson, and all the other members, thank you for inviting the Rural Coalition to speak here today. I was raised on a farm in Milwaukee, Oklahoma. For decades, my family raised cow-calf operation. Me, myself, I am now the executive director of the Oklahoma Black Historical, where I worked with farmers and ranchers for decades about the challenges that they have in their areas. Right now, I'm currently working with the black mayors of all the historical towns in Oklahoma, trying to rebuild their economic base. We're seeking investments in rural communities, infrastructure needs, and other businesses. This morning, I will concentrate on critical issues with livestock production to help build progress from the 2018 bill to assure fair service to all producers. The value of land in Oklahoma at this particular time is highly vital. Investors are putting the price of land up so high that young producers can't even get to invest in their own farms. Small-scale operations and multi-general land tender for the nation's moderate and small-scale farmers and ranchers with special emphasis on beginning and historical producers should be a key goal for the next Farm Bill. Fair and efficient, affordable agriculture credit is essential underpinning to the continuity of these farms and operations and sustainability of these communities. Several producers have basically talked about the tactics and everything that they are confronted with in the offices, which basically hinders a lot of the financial services and things that they need, such as fair treatment, just to basically be able to go in and get the necessary treatment that other people get when they go into the office. There seems to be a double standard. And I think that there should be more stringent checks and balances on these particular things. But we have demonstrated as a community-based organization over many years that technical assistance to these community-based, these communities and community-based organizations are who the people trust. Our organization and partners across the country using technical assistance to farmers learn enough about the programs to understand the benefits and assess these programs. As we go through this process, and we're here, as I'm here as a member of the Rural Coalition, and to urge this committee to work on more modernized farm loan programs and expanding the FSA microloan benefits. A producer who is starting and transitioning farms needs to have equitable chance to build sustainability. Our producers strongly support the 7-year operating loan with no payment for 3 years. A farmer who can build 3 years of equity should be able to make payments on his land, operate the farm, gain the ability to become sustainable. And we urge that the Farm Bill authorize such a loan structure to afford producers a chance to build equity and ensure that they can cash flow and cover the payments of their loans. In closing, a farmer said to me, farming is a hard job. We face all kinds of obstacles, floods, wildfires, and doing all of this. But most underserved farmers have a full-time job off the farm. To face all these obstacles, the farmer is committed to the legacy of the land. And I asked him, why do you keep doing this? And the farmer said, I love it. I just love it. I love farming.
Thank you. Thank you very much, Mr. Tillman. And now, Mr. Brown, please begin when you're ready.
Chairman Scott, Ranking Member Thompson, other members of the committee, I want to begin by thanking you on this committee for all that you've done for America's farmers and ranchers getting through the difficult times of the past several years. The farm economy has bent, but it has not broken. Through volatile commodity prices, a pandemic, and now a resulting supply chain and inflation crisis that are driving up input prices for production and increasing the cost of goods across the economy. My name is Adam Brown. I'm a 6th-generation family farmer from Central Illinois, where I raise 1,100 acres of corn and soybeans on some of the blackest soil in the world. Our ancestors broke sod in the 1860s to provide for their family, who had pioneered west from New Hampshire. The land proved to provide great food, a home, and way of life for the family. The care and conservation of that land began then and has persisted through multiple generations and continues today. At the end of 2017, my grandpa passed away as I was in the process of buying my uncle's share and preparing to buy my dad's share in the operation. Cash flow and debt loads were strained by the passing of my grandpa, as I would need to purchase several hundred acres from the many heirs of my grandparents' estate. The USDA FSA's Direct Farm Ownership Joint Financing Loan Program was a solid fit for this transaction, as my lender, Farm Credit Illinois, also had stellar young, beginning, and small farm real estate offerings to make the 50-50 split a workable solution for my situation. Still, to get through the cash crunch, I had to rely on participation in other USDA programs, like the NRCS's Conservation Stewardship Program and FSA's Marketing Assistance Loan Program. After the successful acquisition of the other heirs portions of my grandparents' estate, I had to change the formation of my business from a partnership to a sole proprietorship, which resulted in changes to USDA paperwork. The unwillingness of NRCS to review my application to CSP because of an administrative paperwork error remains a singular source of frustration and speaks to the inefficiencies of government that oftentimes prevent new and beginning farmers from gaining access to the programs they need to stay afloat until they have their feet under them. After a year of being forced to the sidelines, however, I finally requalified for the conservation program. And as a result, I expanded my use of no-till practices and for the first time created a pollinator habitat and utilized cover crops on my farm. Government programs certainly can't make up for every cash flow problem a farmer may face. Tight margins over the last few years have forced us to find ways to tighten our budget to make ends meet, including the liquidation of non-essential farm equipment. The most painful sale being that of the first tractor that my dad ever rode on, a 1950 Ford Ferguson T20, which brought in $1,480. And while that was a difficult and emotional step to take, the survival of my farm for the next generation is my top priority, just like it was for the generation that passed it on to me. Even those tough business decisions were not enough. I still needed some help to keep things running. And the loan programs that were available for young, beginning, and underserved producers came through for me in one of the most difficult and stressful times of my life. I found ways to pay it forward as I served on the most recent USDA Advisory Committee on Beginning Farmers and Ranchers, where I led a work group dedicated to providing recommendations to USDA for improvements to existing programs on behalf of new and beginning farmers and ranchers. These recommendations include access to capital, access to land, tools for transition, information, and customer service, as well as a revised and aligned definition of a beginning farmer and rancher. According to FSA, there has been no carryover of approved unfunded loans since fiscal year 2018. Therefore, heading into discussions for the next Farm Bill, the focus should be on ensuring that everyone that potentially qualifies for a loan under the program has equal access to it, and that both the farm operating and farm ownership loan limits are keeping pace with the rising costs of farm equipment and farm real estate. I thank you again for the opportunity to share my story with you today. I look forward to any questions you may have.
Thank you very much. Thank each of you for your excellent testimonies. They were very, very good. Now at this time, members will be recognized for questions in order of seniority, alternating between majority and minority members. You will be recognized for 5 minutes each in order to allow us to get as many questions in. And also, members, we are on a tight schedule, so I'm going to hold strict discipline to your 5 minutes because we will have soon votes on the floor. And we would like to make sure we're able to conclude our hearing before the noon hour. I appreciate your cooperation in this. And of course, as I always say, please keep your microphones muted until you are recognized in order to minimize background noise. And my first question will go to you, Mr. Kaufman. You mentioned that global uncertainties, such as the war in Ukraine, may impact our financial stability going forward. And that is an excellent point. So, if the war continues into 2023, what financial impact will this have on our agriculture sector?
Well, thank you for the question, and I guess I would start by recognizing that the war has had a pretty direct impact on the price of commodities, but also the price of inputs, specifically fertilizer, but also fuel. That has created an environment of uncertainty and elevated volatility in markets. It has made decision-making a bit more challenging. It has elevated the need for financing in some cases, and has also, I think, elevated the sense of concern among lenders, just given the push on profit margins from some of those increases in costs.
And tell me, what suggestions, what recommendations could you share with this committee as to what you feel we need to do?
I would suggest that it starts with disciplined risk management strategies on behalf of producers. That might include marketing strategies. It might include leveraging the programs that are there that some others on the panel have already discussed. It would also include interacting directly with lenders to understand the position of lenders and some of the things that they might require to ensure that the capital is there to move forward.
And would you not agree that I was absolutely stunned to find out, and many people did not know this until I mentioned it to our chairman of our Federal Reserve in my financial committee, that right now Russia controls and produces 66% of all the fertilizer. So my question to you, how do you feel we might be able to address this? We have some funding going forward in another bill, but I'd like to hear it from you. What do you think we can do? Can we stimulate more fertilizer and growing right here at home?
There may be some possibilities of ways to increase fertilizer production, but it could take some time to do that. As I mentioned earlier, I think having some of the discussions between those entities, that might be involved with securing those inputs, could be useful. I know in many cases, farmers struggle not just with the cost of those inputs, but even just the availability and how to navigate some of the systems. I think having processes in place that might clarify some of those could be useful.
Yeah, I certainly agree with you. Now, Ms. Davey, you noted in your testimony that black farmers have historically been denied access to credit. Black-owned farms are often less profitable than white-owned farms and less able to obtain federal payments that support their profitability. We are addressing these, but let me ask you, would you share with us what you think are some of the most effective ways in which we can break this cycle? Ms. Davey.
Thank you for the question. I think that we do need and would benefit from a more robust civil rights process at the local levels. That's where the majority of the complaints of perceived and actual discrimination are taking place. So one recommendation could be the development of a local civil rights ombudsman that conducted annual civil rights reviews, something that has not consistently taken place despite the acknowledgement of the discrimination that was happening at the local level through the class action discrimination lawsuits.
Well, thank you. And we are addressing that, and we will continue to do so. And now with that, I will now turn to the distinguished gentleman from Pennsylvania. My friend, the ranking member Thompson, is now recognized.
Well, thank you, Mr. Chairman. First of all, Mr. Brown, first I want to commend you for all that you've done in just 5 years of farming. 1,100 acres of prime Illinois farm ground isn't cheap. And it's a true success story that you were able to utilize these programs the way that they were intended to transition the farm from your grandfather, father, and uncle. In your experience with several different credit programs, what do you believe was the most successful, and did you have any complications or issues that we can look to address in the next Farm Bill?
Thank you, Ranking Member Thompson. I would say that the most successful program was the Joint Farm Ownership Loan Program, where I was able to establish real estate in my name early on in my operation, and that was through joint financing between the FSA's program and Farm Credit Illinois, which has a stellar, what we call Fresh Roots YBS program. Giving access to capital for young, beginning, and small farmers is an initiative obviously near and dear to my heart, but I want to see other farmers in my same boat succeed. And I don't think I'm uncommon in the approach that I've taken, and the access to capital for young farmers just starting out will continue to be an issue down the road. So I would ask that that program be extended and that the caps on that program be raised as the costs of our inputs, the cost of our land continue to increase as well. I would mention that my troubles transitioning through the CSP program, the Conservation Stewardship Program, were incredibly frustrating as we changed the structure of our farm from a partnership to a sole proprietorship. And I think that stumbling block continues to be an issue for farms as they transition from one generation to the next. Also, I think it's important that the USDA acknowledge the Advisory Council for Beginning Farmers and Ranchers. We had a lot of proposals that have not been acted upon by the USDA at this point. So thank you.
Well, thank you. You know, one of the issues I hear, the most reoccurring question I heard, and it was actually a phone call just 2 days ago, most recently, from new and beginning farmers, and quite frankly, seasoned farmers that are struggling, knowing what to do with their farmland, the transition, is the issue of solar fields. You know, in the rush for both federal and state for alternative green energy, we've had consistently very generous subsidies and tax breaks that has risen the price of leasing ground. And for young and beginning, that's kind of where normally folks will start with trying to lease off of larger tracts of lands from other farmers. And it's pushed the value of this acreage, these leases for solar, well, at least in my experience, the people I'm talking with, well beyond what typically you would be able to lease for actually agriculture. Not opposed to solar, obviously. I'd sooner see it on marginal lands, lands that are maybe environmentally sensitive versus fertile production lands. But I heard that on a Zoom or a call that I did initially from with young agriculture professionals throughout the state of Pennsylvania, and it's been a consistent theme. In your experiences, Mr. All witnesses, have you heard about this issue at all? Is this something that is you know, in the different states represented here?
Well, I can start by offering just one comment, and that is to agree that what we have heard is that there are certain aspects of land that do add value to that land. It might be by way of solar farm, it could be wind operations, it could be other mineral rights, and that's been going on for some time. What that has led to is obviously a larger equity for those that own the land, but perhaps, to your point, raising the cost for those that are trying to operate. And so it does make it a little bit more challenging then for those trying to enter, just given the high costs of entry.
Thank you for that, Dr. Kaufman. Just real quickly, Dr. Kaufman, what is the near-term threat to credit conditions for farmers? Is it high interest rates, weakening commodity markets, lower land values, or something else?
I think in the near term, it's the high input costs combined with the potential for reductions in commodity prices. For this year, much of that environment looks pretty sound because many farmers do make sales in advance and they've already secured their inputs in previous months. The concern might potentially be moving to the end of this year as they're securing those inputs for next year, and there could be lower profit margins.
Very good, thank you.
Thank you very much. And now the gentleman from Massachusetts, Mr. McGovern, who is also the chairman of our House Committee on Rules, is now recognized for 5 minutes.
Well, thank you to all of our witnesses, and I want to thank the chairman for convening this important hearing. I think it's critical that we hear directly from farmers when systems that are supposed to empower them aren't working the way that they should be. And I'll just quickly say to my colleagues that I think we need to be prepared to be responsive to what we've heard today. Ms. Asherman, I want to make sure I get this right. When I was reading your testimony, did you say you grew up in Massachusetts?
Yes, I was born and raised in Boston.
Well, that's why maybe that's why I thought you were particularly compelling today. But in any event, I want to congratulate you on all your successes, and we're certainly proud of the work that you're doing. But what struck me during your testimony was how much your story reminded me of stories that I've heard from farmers and would-be farmers in my district. They're interested in getting away from traditional row crops and opting for sustainable practices with the goal of contributing to local food systems. Often they're the ones helping to build local food systems from the ground up. But just as you detailed, translating the desire to start farming into being launched is a daunting task. So I have a two-part question for you. First, could you please elaborate on some of the hurdles that you face while seeking a loan from FSA? And do you feel that FSA and other lenders sufficiently value your type of operation in the overall farm economy?
Thank you for the question. I would say the initial hurdle for myself was that I had no experience or understanding on how to go into any type of ownership process. My dad sort of explained to me, most people just buy one home in their life, and that's a pretty big deal. So just navigating the language, the paperwork was its own initial challenge. And I think that was really made more difficult by the fact that the language that my loan officers, their expectation of what a farm would look like, what it would gross per acre, what it could produce per acre was just in a totally different realm from what my understanding was, because they were really talking about a different kind of farming. And that sort of goes to your second part of the question, which is just there's very different kinds of farming practices out there. And if the loan officers on the ground are not open or well-versed in and familiar in the kind of operation that you are running, they're not only going to struggle to make sense out of your supporting documents, but I feel like often do undervalue the type of farming that you do. And I definitely feel like a minority in my area in terms of the type of farming that I'm doing.
Well, as a follow-up, let me just say I'm inspired by the work you're doing to build a more just food system, and one that works for existing farmers and aspiring farmers while making healthy food accessible to every community. So how can expanding access to credit for farmers like you help with that vision?
Well, I'm a big proponent of the local economy. I absolutely have respect for larger farmers that are shipping international and growing on just a totally different scale than what I'm doing. I feel like local food economies are the most resilient food economies. I feel like I saw this during the pandemic when Walmart was running out of food and we were still setting up at the farmers market. I think that smaller farms that are selling within a more narrow radius are keeping that money in the local economy better. I think that we're employing people in our communities who are staying in our communities. And I just believe in the power of smaller farms producing more of our domestic food.
Well, I thank you for your answer, and I share your vision here. And I want to thank the entire panel of witnesses. And Mr. Chairman, I'll yield back my time.
Thank you. Thank you, Mr. McGovern. And now the gentleman from Georgia, Mr. Austin Scott, is now recognized for 5 minutes.
Thank you, Mr. Chairman. And I want to mention with regard to the FSA loan process, one of the most successful farmers I know in Georgia who I've had a relationship with for a long time called me. He was trying to help his son get started. And after about a year, he finally went to the local bank and just co-signed the note with his son. And his comment to me was nobody who could access credit anywhere else would go through the process at FSA. So I am sure that the loan process is flawed. I think we need to work on that. I do want to mention one thing, and I want to say this cautiously, but I do know we're trying to make progress with this. And this really goes, I guess, very quickly to Ms. Peavy and Mr. Tillman. But one of the key issues in my area, and talking with professionals at Fort Valley State, is the heirs-related issue and no clear title to property. And so when there's timber on the property, the timber companies are scared to contract to cut the timber because of the heirs-related issue and no clear title. It's hard for a bank to loan money without clear title. I know we're doing some USDA, there's some USDA initiatives with that right now, but I'll leave it with you, Mr. Tillman. I'm from Georgia. Is the heirs-related issue with minority farmers, how big of an issue is that in Oklahoma, where you're from, and how much progress is being made on resolving that issue?
It is most definitely a problem. When you have a parcel of land and you've got 25 or 30 heirs to it, you know, that's kind of a pickle of a mess. And trying to sort through things of that nature is quite expensive and basically very hard to deal with. And we are basically doing a lot of heir property workshops and development of wills and things of that nature to make it that much easier for the next generation. You know, because all of that basically occurs when the unexpected happens. And then you've got that challenge there of trying to divide up everything equally among all the heirs.
David and I have been good friends for a long time, and we have some pretty heated conversations on some of the issues revolving around race and agriculture. But this is one of the issues that this clearly disproportionately impacts minority farmers. And it's one of the issues that needs to be resolved for everybody. And so I look forward to working to help continue to resolve that. Because if you don't have clear title, you can't get the loan. That's the bottom line.
Right.
And I do think through Fort Valley State and some other institutions, we can work to help people. It won't be perfect, but it'll be better than it is. I do want to mention this, Ms. Asherman. You hit on this. 90% of our food supply in this country comes from about 12% of the farmers. We have to have large production agriculture. One of the things I see that is so difficult for our beginning young and small farmers is it costs more when you're a beginning young and small farmer. And so what you get if you're a big farmer might pay the bills, it might not right now, but it won't pay the bills at that same ratio if you're a small farmer. How far do you have to travel to get to a farmer's market, Ms. Asherman? Ms. Asherman?
You may need to unmute, Ms. Asherman.
I'm sorry, my internet is extremely slow. I was trying to unmute. I drive 2 hours to my major market, and I also sell on the farm and a half an hour away smaller market.
And this is one of the issues, Chairman. If you're a beginning young and a small farmer and you're growing the way Ms. Ashman is, you have to have access to markets to sell your products. And as our farmers markets have closed, just like as our smaller meat packing facilities have closed throughout Georgia, it's made it that much more difficult for our beginning young and small farmers. And candidly, it's given more control over our food supply over to the largest of the corporations. With that, I know my time has expired, and I apologize for your internet service, Ms. Ashman. I'm hopeful that your EMC will be delivering 1 gigabyte to you shortly.
Thank you, Mr. Scott. And now the gentle lady from North Carolina, Miss Adams, who is also the vice chair of the Committee on Agriculture, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you also to the ranking member for hosting the hearing. This is an important topic. To our witnesses, thank you for your testimony. It is timely. There's a new generation of farmers in America. They're different from older generations, younger, more diverse and choose to grow other crops. An increasing number of them are women. At the same time, farmland is transitioning to new hands. And while the 2018 Farm Bill made strides in programming and microloans, there's still major gaps in the federal agricultural credit system. Ms. Davy, your testimony briefly mentions these gaps, especially for Black and minority farmers. Farm Service Agency loans require 150% equity on purchase loans, require copious amounts of paperwork, and they take months to process. So what should Congress do to simplify the application process for young and socially disadvantaged farmers?
Thank you for the question. Congress has already done a lot, and with regard to the previous question that was asked with regard to the air property issue, in the most recent Farm Bill, the 2018 Farm Bill, Congress already acknowledged the need for services for heirs property landowners and authorized the air property relending program. And so I think that the microloan program is another example of the intentionality that Congress has brought to addressing these communities and this issue. I think that the loan application process itself has been has had a lack of transparency. There are times when farmers are telling us that they're receiving requests for duplicitous information. And in the example of the farmer that I spoke with that was told that the farm home was too nice for the property, when he asked his FSA agent to explain what the house had to be like or look like to conform with their expectations of what a farmhouse should look like, there was never an explanation given. There's never been really any clear, transparent guidelines on what a pre-approval or what an approved loan would look like. And so there needs to be assistance in addressing the information of what is required upfront, as well as a process that is streamlined, in many ways similar to the reduced paperwork burden of the microloan process. But
Okay.
I definitely think transparency is
Thank you. Thank you, ma'am. Okay, so let me ask about AG's government-sponsored enterprise, the GSE Farm Credit. Congress requires other GSEs to set aside their profits for grants. So should Congress mandate similar set-asides as grants for farmers? Ms. Davy?
I'm sorry,
Should Congress mandate similar set-asides as grants for farmers? I mean, they require other GSEs to set aside their profits for grants. So should we mandate similar set-asides, set aids as grants for farmers?
We're grateful for the set-aside programs that exist and definitely think that any opportunities to expand set-asides that would benefit socially disadvantaged farmers and their ability to own and control their finances would be a benefit to all.
Right. Okay, thank you very much. Mr. Kaufman, you mentioned that demand for farm loans is expected to rise. I was surprised to learn from Ms. Asherman that Farm Credit and Farm Service Agency loans are not reported to credit bureaus. So can you help me understand why that is and the impact it may have on farmers' ability to build credit?
I can't speak specifically, I guess, to the reporting mechanisms. My comment was to recognize that some of the credit demands appear to be rising in conjunction with the rising input costs.
Okay. All right. Thank you very much, Mr. Chairman. I'm going to give the 51 seconds back to you. I yield.
Thank you very much, Ms. Adams. And now the gentleman from Tennessee, Mr. Desjardins, is recognized for 5 minutes.
I thank the chairman. I just have a couple of quick questions, and I was going to address those to Mr. Brown. First, supporting the next generation of farmers is a huge priority for all members of this committee. If the elimination of stepped-up basis had occurred prior to your generation, how would it have impacted your ability to maintain the farm?
Yeah, thank you for the question, Congressman. Stepped-up basis changes would be devastating for our operation. As a sixth-generation family farmer, my intent is to pass the farm on to the next generation and to take advantage of any tax breaks that are at all possible will just provide us the opportunity to feed that money back into the operation. where we thrive on stewardship of our land and growing the economy in our rural town. As you know, keeping money locally is very important for us as farmers, and local towns are really struggling for us, our local bank and our local elevators. So as much of that money as we can keep in the local economy, we will.
Okay. Secondly, I often find that some perceive beginning farmers and ranchers that have smaller operations or operations that are not their full-time job. Could you add some color to why this perception is wrong and the importance of beginning farmers and ranchers of all sizes, including larger operations?
Sure. Let me say that as our operation is 1,100 acres, I would consider that small in this day and age. We have to compete with very large corporate type farms, which have access to economies of scale that we can't readily compete with. So as I mentioned in my testimony, we like to take advantage of conservation programs and continue to incentivize programs that we've done in the past and build up our soil quality and efforts to maintain a healthy community. It's very important for me to keep a corn and soybean operation. Our conventional system is what I'm used to, what I know well, and what we built our grain system around. We're currently putting up a grain bin and trying to be as efficient as possible. And if very small niche farms are more heavily incentivized than ourselves, it puts me at a competitive disadvantage because I can't pivot as quickly as some of those operations as we continue to focus on corn and soybean operation.
Okay. Well, Mr. Brown, thank you for being here today, and I'd like to thank all the witnesses for being here for their testimony for this important hearing. And Mr. Chairman, I will yield back the balance of my time.
Thank you very much. And now the gentlewoman from Illinois, Ms. Bustos, who is also the chair of the Subcommittee on General Farm Commodities and Risk Management. You're now recognized for 5 minutes. Ms. Bustos. You may want to unmute Ms. Bustos.
Ms. Bustos is not ready. Ms. Brown is on the platform.
If not, we'll come back to Ms. Bustos. I now will recognize the gentlewoman from Ohio, Ms. Brown, for 5 minutes.
Thank you, Chairman Scott and Ranking Member Thompson, for holding this hearing. Access to credit is one of the most important components of long-term success for young, beginning, and underserved farmers and ranchers, and Congress must do all it can to support these farmers and ranchers. I represent the city of Cleveland, an urban area in which many of my constituents live in food deserts and have limited access to fresh fruits and vegetables. Urban farming ventures offer an innovative solution to fighting food insecurity and building healthier communities. Vice President Kaufman, thank you for joining this panel. In your role at the Federal Reserve Bank of Kansas City, you examine agriculture credit condition and farm finances. Can you please speak to the accessibility of credit to urban farmers, how they are using these loans, and whether the loans are sufficient to meet their needs?
The first thing that I would suggest, I guess, there is that generally speaking, the access to credit is one where those that have the most established relationships have typically been most easily able to navigate some of the systems with credit. So that has been maybe a bit more of a challenge for some of those that are exploring niche opportunities, such as those in urban locations. There are opportunities, though, for those individuals, and it seems like some of those niche opportunities have become more prominent alongside some of the other comments about local food systems.
Okay, so it sounds like there are some challenges with accessibility. So if you could speak to how Congress could improve these programs to better serve urban farmers.
I think one of those might be to recognize where there could be opportunities to, again, help with the relationship development, understanding what the programs are, understanding what the resources are, and maybe contacts that can help connect those that recognize where there are market opportunities with those lenders that may be unfamiliar with some of those opportunities, but still stand at the ready to be able to provide that credit.
Thank you so much. Well, with that, Mr. Chairman, I will yield back the balance of my time.
Ms. Brown. And now the gentleman from Illinois, Mr. Davis, is recognized for 5 minutes.
Thank you, Chairman Scott. I also want to thank Ranking Member Thompson. Earlier this Congress, I introduced the Farm Credit Administration Independent Authority Act with my colleagues, Representatives Jimmy Panetta, Michelle Fischbach, Abigail Spanberger, and Angie Craig, to mitigate a serious threat to the viability of the farm credit system from the CFPB to implement an overreaching one-size-fits-all proposed rule on small business lending data collection. The proposed rule would demand new, costly IT infrastructure, additional staff, and would ultimately make lenders guess the demographic information of a borrower in the name of fair lending if left unreported. Our bill clarifies the Farm Credit Administration as the independent regulator of the farm credit system and would stop the implementation of the CFPB's proposed rule as it applies to farm credit. Right now, we're working to move this bill through the appropriations process, given the time-sensitive nature of this issue and the immediate harm that it would cause rural America. And I hope that the Rules and Appropriations Committees will work with us to resolve this quickly. Farm credit system lenders have proven to be an effective tool for rural communities, and we must preserve their independent regulatory status. Now, in the context of the conversation that we are having today on the state of credit for young, beginning, and underserved producers, this is an important issue we should be seeking to address in the immediate. On top of all the supply chain issues, increasing input costs, raging inflation, we can't also put the availability of credit on the line that will only serve to discourage individuals like each of you from seeking careers in farming and agriculture. Now, my question, and I'll start with my good friend, Representative Brown, if new and beginning farmers do not have continued access to ag lending entities like the farm credit system, what could the future of your operations look like, and do you see it as a barrier to entering the field?
Well, I hate to even imagine what it would look like for us to not have farm credit in the mix. Farm Credit Illinois has been the steady hand in our operation through our transitioning farm, and they offer educational courses as well as through their Fresh Roots program that I noted before, breaks the interest rates on operating notes and real estate notes for young farmers. In fact, about 35% of new notes that come to Farm Credit Illinois are from young, beginning, and small farmers. And so we're growing the future of Illinois agriculture. Without the assistance of Farm Credit, I'd be hugely concerned.
Well, I mean, I don't know your financial picture. I've known you a long time. I probably wouldn't lend you $20. So, Adam, thank God we have the farm credit system to help, help operations like yours grow. And obviously I say this in jest because I've seen your operation and I've seen what a system of availability of credit from an entity like Farm Credit has been able to do for you and your family to grow your operation. So, I mean, as you mentioned, this would be a devastating blow to anyone in your situation or anyone who might not have, who may be in a situation where they might not be able to get that available credit without the entity. Mr. Tillman, would you like to address the issue of the CFPB rule that I mentioned?
Well, what I see is that and I'm going to try to deal with the credit issue. When a farmer basically gets a loan from FSA, he pays the loan off before time. But he was forced into a lot of these things by the actions that were basically taken towards him as they meet and discuss where they really are. This was more of a threatening type thing for the particular farmer, so he pays it off ahead of time. Now, when he did that, not knowingly that he would not be able to get a loan again like that, that's whereas that if somebody does something good, why should he be punished for it? So you can't get another direct loan. You graduated, in other words, to the other state of that particular deal.
Well, thank
And
you.
that is a point that I'd really like to make, whereas that, like, if you've done something good, why are you not able to stay with something that you're accustomed to?
Well, thank you for your comments, your remarks. I yield back.
Thank you, Mr. Davis. And now the gentlewoman from Virginia, Ms. Spanberger, who is also the chair of the Subcommittee on Conservation and Forestry, is recognized for 5 minutes.
Thank you so very much, Mr. Chairman, and to our witnesses. I thank you so much for your time, for being with us today. And I was wondering if you could just give us, and I know that you've submitted written testimony and certainly answered many of our questions, but if you could identify one thing in the system and I know there's many challenges, but one thing in the system that you would change and what that potential impact would be. I was wondering if, if you could wave a legislative magic wand, what would you suggest for us? And I open it up to any of the witnesses.
I didn't hear it.
If I had my legislative magic wand, I think that, as I mentioned in my previous answer, a more robust civil rights process at the local level would be the biggest need for our community, despite the increases in credit limits, despite the availability of the air property relending program. If people cannot get their applications reviewed and processed because of any discrimination that is occurring, that is going underreported and under recognized, that barrier is insurmountable and doesn't even open the door to accessing credit. And so I definitely think that would be the highest need at this time.
Thank you very much for your testimony. Certainly, thank you for sharing your experiences, and thank you for bringing greater clarity to your answer, and raising awareness about having local steps for raising concerns or bringing challenges. To any of the other witnesses, would you care to add anything else?
I would love to add something. In addition to waving the wand for that ask, I do think that a pre-approval process for ownership loans is really important. It's something that most other lenders offer, and it would keep farmers competitive. And I also think that one of the amazing things about FSA repayment is you can make an annual payment instead of monthly payments. And I'm assuming that's because FSA recognizes cash flow is very seasonal for farmers. Mm-hmm. Well, workload is also incredibly seasonal. So being able to do some of that burdensome paperwork or do some of that pre-planning, get a pre-approval in your off season, and then be able to look for land, in an ongoing fashion would be a major benefit to farmers.
And so you're saying, recognizing that there's already a very sort of uniqueness to the industry, if you will, that FSA has already taken certain steps. And so applying those kind of on the front end as well, those assumptions or those understandings. Okay, I appreciate that. Any of the other witnesses? I can't see in the committee room.
I would like to basically make a suggestion. This is an administration of equity and fairness. And being of equity and fairness, I think that there needs to be programs developed based on the past discrimination of a lot of these things, whereas that a person who basically receives a ownership loan and an operating loan, the first 3 years of his operating loan, he should have a waiver for him to build equity and sustainability in this process. This will give him cash flow, chance for him to basically build a sustainable base for his operation. Mm-hmm. And with this, he can therefore take the monkey off his back. Yeah. And be able to actually manage, operate, meet the necessary needs of his farming operation.
And have that breathing room as things are getting up and started and the operation is sort of working out the challenges. That makes sense. Well, thank you very much to our witnesses. Mr. Chairman, I want to abide your instructions for us to stay on time, so I yield back. Thank you so much.
I appreciate that, Ms. Spanberger. And now the gentleman from Arkansas, Mr. Crawford, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and I thank the witnesses for being here today. You know, I guess there's a long history of young and beginning farmer programs, and probably have their roots as we know them today going back to the 60s as part of the Great Society under the LBJ administration. And yet we see a continual trend for the average age of a farmer continues to climb. And as is indicated by the chairman and the ranking member, we're bumping 60 years of age and climbing on the average age of a farmer in the United States. I had an occasion to text a good friend of mine, as a farmer back in my district. I said, if you could distill it down to a sentence, what do you think could be done to bring down the average age of a farmer in the United States? And here was his surprising response, and we're going to talk about this. His response was, stop consolidation of the ag distribution network. So if we unpack that a little bit, you know, the genie's basically out of the bottle here. Can we put it back in? I don't think so, because the smaller guys are paying 25 to 30% more for inputs because the system is set up to accommodate the leverage, the strength in numbers, the economies of scale. Look, I'm not going to malign economies of scale. I don't want to penalize people for being successful, but at the same time, if we're going to backfill our production base, we've got to think forward about how we address this. And all the credit programs, and it's not just the federal government, there's all kinds of entities in every state that are engaged in some form of young and beginning farmers incentives, and yet we still see those numbers climb. We haven't moved the needle at all. So I want to talk about this system that we rely on the ag distribution network. And Mr. Brown, I'll start with you because you look like a real success story, and that seems to be the exception versus the rule with regard to integrating young farmers into the system. Give me your take on that statement on the ag distribution network.
Well, I'll note that the ag network is difficult to navigate for a young farmer. And as you mentioned, input costs, commodity prices, weather, all present many variables and challenges to me as a young operator. How do I compete with that? I think we compete with relationships, with education, and you compete with those, the corporate advantage, what I would call, with hard work. And the only way that I can overcome these challenges is by outworking, by out-communicating, and having greater access and understanding of how our operation is set up and why it's a better approach than maybe the corporate attitude that you mentioned.
Well, and I don't want to get into a dynamic of where we're talking about corporate farms, quote unquote. I'm not here to try to paint a negative picture of economies of scale. We rely on those economies of scale. What I want to do is to talk about how we get that young person. I mean, as I said, I think you tend to be a little bit of an exception to the rule when we see a continued upward trajectory in that age. And then, you know, on the other side of the spectrum, you look at Ms. Asherman, who is on small acres, and that's another success story. Again, probably a little bit of an exception. I'm going to ask Ms. Asherman to kind of weigh in on this as well. What have some of the challenges been for you? It's probably not so much access to capital as it is to the competitive disadvantage you find yourself in because you are starting from a position of not being an economy of scale. Do you want to weigh in on that, Ms. Asherman?
I do. I will say that I think it's important to clarify that when we talk about small farmers, we need to clarify, are we talking about small acreage or small gross sales? And there is a big difference between a commodity grower, a row crop grower, and a direct produce market grower.
Right. So this is illustrating the need for rural broadband. I think I take your point, Ms. Asherman, and let me just say that, and you make a good point about the difference between, gross sales versus acreage, and I'm talking about sales, really, I mean, your revenue generated from your efforts, not so much the size of the operation in terms of physical acreage, but the impediments to being successful on the front end, and Mr. Brown alluded to this, you know, you've got to be this much better than your competitors to be able to get the capital you need, but you still start from a distinct disadvantage. And to me, those are the things that we're going to have to wrestle with if we're going to move the needle on our aging farm population. With that, Mr. Chairman, I'm going to yield back.
Thank you very much. And now the gentlewoman from New Hampshire, Ms. Custer, is now recognized for 5 minutes.
Thank you so much, Mr. Chairman, and I apologize for not being available earlier. I want to thank our panel for being with us today. I'm so grateful we're having this conversation. As has been noted this morning, the average age of farm producers is 57 years old. And the most recent agricultural census in New Hampshire found that a third of our producers are over 65 years old, but only 7% are under 35 years old. So that disparity is very troubling, especially in the long term. I've yet to meet a farmer producer who isn't passionate about what they do. The work requires passion. Growing our food can be incredibly rewarding, but it's not an easy life by any means. And that's why Congress must do all we can to ensure that young and beginning farmers have the tools and support that they need to succeed. We're going to need them to continue the legacy of small family farms in America and to grow enough food to feed our nation and others around the world. We've got to incentivize young people who are interested in agriculture, such as our speakers here today, because the challenges facing them are daunting. And as the next generation of farmers looks increasingly diverse, including women and people of color, including those from historically underserved communities, I think this will enrich our nation's agricultural sector tremendously. I'm grateful there's an incredibly dedicated community of lenders in our state, as well as stakeholders who focus on education, training, and farm transition planning. We've great partners as well within the Farm Service Agency, but nevertheless, young, beginning, and underserved farmers still face barriers, including access to land and capital. Ms. Asherman, maybe it's because you're a New Englander at heart, but I really enjoyed your story and your testimony. And I was so struck by how you finally found farmland on Craigslist. Could you elaborate on the challenges you faced in finding affordable farmland and how having a pre-approval process for FSA direct farm ownership loans might have helped your situation?
Thank you for the question. I will say that I am fortunate, and in my area, affordable farmland is very available. I think that is rare, and I know for a fact from my farming peers that is not the case in all of the states and in all of the regions, and even with all of the regions within my state of Georgia. So in my case, finding affordable farmland was actually relatively easy. I think a pre-approval process would enable farmers to plan, and farmers are naturally planners. It's very difficult to be shopping for land, meet a landowner, make an offer, and then have to say, oh, but by the way, I still have to go actually secure financing. So even though I've given you an offer, would you please wait and let me see if I can secure financing, and then have that financing process take several months. A pre-approval process would mean that you would be able to have a business plan where you actually know the maximum budget that you're going to spend on your land, be searching for a property within that number. And then when you find land, you can actually make an offer and you don't have to go then and secure financing.
Got it. Good. Well, I agree. A quick and streamlined process would be helpful. Mr. Tillman, just briefly here, thank you for raising the appeals point in your testimony. Can you describe this appeals process, and are there changes that we need to make?
Didn't quite hear.
Mr. Tillman, did you hear
I didn't quite understand the question. Could you repeat it, please?
You had referenced the appeals process, and I just wondered if you would describe that and if there's anything that we need to do to fix that in the upcoming Farm Bill.
The appeals process?
Appeals for denials of loans.
Oh, yes. There needs to be some type of there needs to be some type of structure there in the appeals process. You know, a lot of times
if I may, Mr. Tillman, the lady's time has expired. But if you would not mind in writing just submitting that really good idea you were about to express to her.
that I would appreciate.
Thank you, Mr. Chairman. I yield back.
Yes,
Thank
ma'am.
you.
The gentleman from Georgia, Mr. Allen, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Ranking Member Thompson for hosting this hearing today. And I want to thank our witnesses for taking time to talk about these important issues. Obviously, we're concerned about where agriculture is presently. Certainly, and it's a global problem. We know that there are a lot of threats out there. We just saw yesterday where the June CPI inflation report shows about a 9.1% increase. And of course, one of the things that I get the most complaints about is if I'm in the grocery store, people grab me and say, "Where is this going?" Or if I'm filling up my car at the gas station, they're saying, they walk up to me and say, "What are you going to do about this?" And I can't imagine, well, I talk to businesses and I know what you're going through on the farm. And frankly, there's not a lot in the Farm Bill to deal with this. Other than you just hope that commodity prices will keep pace with the inflation, which then if commodity prices keep pace, then the grocery store and the other things happen. So this is just this vicious cycle that we have got to tackle. And certainly the two ways to tackle that is discontinue the increase in money supply and quit spending government money. That's the recipe for inflation. So we can have this important Farm Bill oversight hearing on access to credit today, and I'm glad that we are. But I know until we can get our handle on this economy and quit running it from the White House and run it, let it be a market-driven economy, so that we can get a handle on this, it's going to be difficult to predict what's out there. Obviously, we know in every industry that the average age of owners and operators and those in just about every business is almost over 58 years old. So, and we've got to replace those folks. In fact, we've had, 11 million people disappear in the workforce. We don't know where they are. We don't know if they retired. We don't know what's going on. But I guess my first question to you, Mr. Brown, is can you elaborate on the recommendations that were given to USDA on behalf of new and beginning farmers and ranchers and specifically related to programs that could be included in the next Farm Bill?
Absolutely. Thank you, Congressman Allen. I would first note that there's not an aligned and uniform definition for young beginning farmers inside of the U.S. Department of Agriculture. And that's unfortunate because we need to understand who we're dealing with before we can shape meaningful programs around this group of very important farmers. And the recommendations that we made included access to capital, access to land, tools for transition, and information and customer service. All of these had well thought out recommendations that we had formulated over about 2.5 years. Unfortunately, the USDA has acted upon 0 of those initiatives. All of them are meaningful and helpful for our committee that represented young and beginning farmers, and I would ask that we have predictability going into the next Farm Bill. We have so much volatility throughout my operation, throughout the ag economy. If we know what we're dealing with, we can better shape, and as one of the other speakers noted, we can plan better.
Yeah.
And that provides us peace of mind, and let's not have a knee-jerk reaction here, but let's have a well-thought-out plan where farm families have the opportunity to do what we do best, and that's produce the best crops in the world.
Exactly, and the last time we faced this kind of inflation was in the 80s, and we know what that did to agriculture and to farmers. And Mr. Brown and Ms. Asherman, I mean, how is this unpredictability impacting your decisions right now? And quickly, I got 24 seconds on how you're going forward.
Let me say that it's unprecedented for my operation. I'm been involved in the operation since I was 10 years old, of course, but I've owned it for just the past 5 years. And the volatility is very difficult. Fortunately, I bought through the joint financing program, as I mentioned, FSA and Farm Credit, was able to secure some land before the massive inflation hit. But that doesn't mean that we're not going to face tremendous challenges in the future. So I'm trying to keep my powder dry and prepare for the worst.
Good, thank you. Ms.
Thank
Asherman,
you.
if I'm out of time, if you would respond to me in writing, this committee in writing, I would appreciate it. When that, Mr. Chairman, I yield back.
Yes, please respond to him in writing. It would be very helpful. And now the gentlewoman from Illinois, Ms. Bustos, who is also the chair of the subcommittee on general farm commodities and risk management, is now recognized for 5 minutes.
Thank you, Chairman Scott. And I also want to say thanks to our ranking member for holding this important hearing. This has been enlightening, and we appreciate your time. As the chairman said, I chair the subcommittee on general farm commodities and risk management as part of the whole ag committee. And that has jurisdiction over crop insurance. So what I'm especially interested in is how crop insurance and agricultural credit complement each other, and how we can get these two programs to work better as we look at the 2023 Farm Bill. We're in the middle of going across the country. Austin Scott is the ranking member on our subcommittee, and he and I just got back from Arizona. We're going to be going to Minnesota later this month, to Angie Craig's district, and then to Ohio to Congresswoman Capter's district to really take in what do we need to know. So for our panel here, any of our producer witnesses, why don't we start there? How has your buy-up of crop insurance impacted your access to credit, if at all? And whoever wants to take that, again, to the producers on the panel.
If I may, very quickly, I do not have crop insurance, and to my knowledge, I am too diversified to access those programs. So when I apply for credit, or really when I go about my business and my farm planning, I have to take that risk and just own it. I will say that part of the reason I am so diversified is that provides its own level of insurance, in that I can lose any individual crop and not go under entirely for that year. But I and many producers like me do not benefit from crop insurance.
So, Ms. Asherman, then, quick follow-up. What should we know as we go into the 2023 Farm Bill as it pertains to insurance for the line of ag that you're in? What would make things better for you and your colleagues?
I would say that just generally risk mitigation is a huge factor for all farmers of all sizes, scales, and complexities. And I believe that there is a way to offer crop insurance to diversified and smaller farms. I don't know off the top of my head the nuances of that, but I think crop insurance would be beneficial, and any risk mitigation would be beneficial.
Okay. All right. Thank you. Well, we could talk maybe a little bit more offline and as to how that might look. Again, back to my question. about buying crop insurance and how that's impacted your access to credit, if at all. Anybody else have anything to add to that question? Okay, I'm going to move on to the whole panel then. Do you see ways for crop insurance and ag credit to work better for young and beginning and underserved producers? That's to the whole panel.
Congresswoman Bustos, thank you for your question. I will note that crop insurance is vital to our operation in ensuring that our risk is mitigated to a reasonable point. I haven't had to rely upon it myself, fortunately, with a recent claim. In 2012, we had horrendous drought in central Illinois and throughout the state of Illinois. And at that point, it came in very pivotal to the survival of our operations. So I would note that in the future, as simplified as we can get crop insurance, I know we'd like to cover yield as well as price, but it's an overly complex program at this point from my perspective.
Okay. I'm going to go ahead and move to my next question since nobody chimed in right away. So I want to switch gears to the value of property in today's market. So during the last Farm Bill, I've been involved with helping to mark up 2 farm bills now in my time here in Congress. But I was really proud to be able to work with the ranking member, Thompson, on the inclusion of Farmers of Tomorrow Act. And what that did is it eased some of USDA's financing requirements on young farmers and veterans to help them access credit to buy land. You know, obviously it's clear that more needs to be done in our next farm bill to keep up with the increasing property values. So just wondering, any thoughts that anybody on the panel has about this? And Dr. Kaufman, let me, if you can speak to the impact that high real estate values have on young, beginning, and underserved producers who are trying to get into farming.
Well, just very quickly, in the interest of time, what I will say is that does present a barrier just in terms of cost. I think one suggestion might just simply be to evaluate what the risk profiles are of producers that would be consistent with the goals of this committee. Crop insurance is, of course, important, but there could be other mechanisms that attempt to try to reduce those risks.
Okay.
Thank you.
Sorry, we're out of time. Thanks, everybody. Thanks, Mr. Chairman. I yield back.
The gentleman from Alabama, Mr. Moore, is now recognized for 5 minutes.
Thank you, Mr. Chairman, for holding this, and for Ranking Member Thompson for obviously holding the committee. Mr. Brown, a couple of questions. You know, we have a farm, and we quit farming in 1980. The drought and armyworms kind of pushed us out, and so my cousin's son he's kind of come back into that operation and is trying to get it going. And what do you see? I've talked to Garrett a little bit about this, but what do you see as the largest barrier to the entry for young farmers and obviously underserved producers? What do you see as some of the I know you had a different set of sort of approaches you had to take, and I think you had to navigate some pretty tough issues, but what do you see as the largest issue right now?
Thank you, Congressman Moore. I would note that the biggest challenge for me in transitioning into the farm operation was the lack of communication and understanding throughout the generational divide, but also in relation with our lenders and associated parties. It's important that we educate those that are entering the agricultural field and for us as young farmers to understand the options that are out there and the programs that are available. I think USDA, from my point of view, does a poor job educating on the programs that are out there and accessible. And with farm bills changing every several years, a lot of times those programs go away or are new out there, and we don't see them at the grassroots level for a decade or so. We hear about them by word of mouth rather than by direct FSA or county offices notifying us. So it's tough to be aware of all the programmatic changes. As I mentioned, consistency is key for us to understand what's out there for young farmers as far as access to capital.
You said consistency is key. So I think with him, he's kind of spoke with a lot of the older farmers in the community, but his dad ended up going and co-signing the note to get him started. I think navigating through that process was just too difficult and timely. It just took up too much time. So and I want to encourage you too, your granddaddy's tractor, do you know where it is still? Or You said you sold it?
We do. It's still local at this point.
We sold a 641 Ford, 4-cylinder diesel, my granddaddy's first tractor, and it's in the family now and totally refurbed, but they sold it in the 1980s. So just keep your thumb on it. Hopefully you can get it back. A quick question, Mr. Kaufman. How does the current state of the farm economy influence access to credit generally, but especially for young beginning farmers? Because there are some uncertainties, obviously, with fuel and inflation. What do you see going forward?
What I would say is that farming is inherently a risky business, and that's true at any time. But in the environment that we're in right now, those risks are elevated, obviously with commodity prices and the volatility there, with input costs, with severe drought in many places. And so what I would say there is that for those that are already at higher risk and have higher risk profiles, that risk is probably a bit more elevated for those producers. And that those tend to be those producers that have the least amount of equity then to absorb any potential shocks.
Any suggestions on how we soften that landing?
I think a recommendation would simply be to identify what the opportunities are to address those risks in the next farm bill. We've talked about crop insurance as one of those mechanisms, but again, there is a growing diversity of farm operations that reflect in many ways the diversity of production. And so adapting those programs and the processes to then, again, reflect the risk profile of those that are entering the business could be one step.
Thank you. And with that, Mr. Chairman, I'll yield back.
Thank you. And now the gentlewoman from the U.S. Virgin Islands, Ms. Plaskett, who is also chair of the Subcommittee on Biotechnology, Horticulture, and Research, is now recognized for 5 minutes.
Thank you so much, Mr. Chairman, and thank you for this very timely and important hearing that we're going to have. And I want to thank all of the witnesses who've been a part of the discussion thus far this morning. There's been so much information that's been shared, so many experiences. I'm really grateful for it. You know, Mr. Chairman, it's so interesting. Just yesterday, at the lunch of the Congressional Black Caucus, one of the handouts that the caucus made available was some clips from the Dallas Morning News, which talks about Black Texas farmers' push on USDA loan relief efforts, which have remained stalled in the courts. Some of the statistics that they shared in that were also startling and showed the difficulty the Black farmers have, and also all farmers of color have with loans. Knowing that, you know, just looking at some of the statistics that they shared with us, that, you know, there are farmers who, a CNN report said that the USDA rejected 42% of direct loan applications by Black farmers, 37% by Asian farmers in 2021. In contrast, only 9% of white farmers were denied loans last year nationally. This is not what happened in Pickford. This is what's still going on today. Another statistic, last year, 71% of Asian farmers and 61% of Black farmers were rejected from direct loans, compared with 23% of white farmers who were denied loans. The statistics each year are very much the same. So talking about credit and access to credit for farmers, particularly young farmers as well, is really important. The questions that I have are related to this. Access to affordable farmland is a major challenge nationally, particularly for people of color, who today make up 2% of farmland owners. We know that owning the land is very vital and important to seeking loans and for credit. There's been a history of backlog of loan applications. If individuals are looking to lease land or purchase a farming entity in the next year, they must make decisions in a timely manner. So I wanted to ask the witnesses, do you find your current application process to be timely, allowing individuals to pursue their goals, having land within a year's framework? I was going to asking that question to Mr. Willard Tillman or Ms. Dania Davey, if you all have found any information about this.
What we've heard consistently at the Federation of Southern Cooperatives Land Assistance Fund through our monthly listening sessions is that the process of applying for a loan is so lengthy and burdensome as to discourage new and beginning farmers and ranchers of color and existing Black farmers from accessing the resources that they need from the Farm Service Agency. And that's part of why one of the solutions that we advocate for is a Black farmer financial institution that is modeled after the farm credit system, in which the farmers themselves have an ownership stake in the credit process, as well as some of that decision making. And we have also, to the preliminary remarks that you made, heard consistently the ways in which the debt burden that continues to handicap those farmers, those 17,000 socially disadvantaged farmers and ranchers of color that were promised that debt relief last year, have also impacted their ability to access credit going into this year. And we fear that that will result in the next wave of land loss for socially disadvantaged farmers and ranchers of color.
Yes.
Thank you so much. The other question I have, Ms. Asherman, thank you so much for being a part of the hearing this morning and for the work that you're doing. In 2017, the Census of Agriculture, 88% of farmers in my district in the U.S. Virgin Islands were over the age of 45. Can you speak about effective methods of educate and grow the future generation of farmers, as well as encourage their continued participation in the agricultural space?
Sorry. Come on.
I think she's having a bit of difficulty.
She is, and as I've gone over the time, thank you so much, Mr. Chairman, and if any of the witnesses are able to put their answers in writing,
Sure.
I really appreciate it. Thank you so much, and I yield back.
Thank you for your cooperation. Ms. Asherman's staff has informed me that you are experiencing some connective issues. So if you would like to turn off your video, it seems that your video is interfering with your audio. So if you turn off your video and proceed with audio only, that might improve it, and we can hear your responses and respond. You're making valuable comments, and we want to hear from you. Apologize for the technical difficulties. And now the gentleman from Indiana, Mr. Baird, is recognized for 5 minutes.
Thank you, Mr. Chairman and Ranking Member Thompson, and really appreciate the opportunity to have this discussion. And I always appreciate the witnesses and their expertise and the information you can bring to us to help us make better decisions. You know, I just have to make a comment, Mr. Chairman, that I'm one of those farmers over 57 and a half years old, and I don't have any intentions of having one foot in the grave just yet. But anyway, I think that's an asset from the standpoint we can serve as mentors, we can serve as advisors, we can also be knowledgeable about some of these programs and can help young people get started in farming. You know, one of the old adjectives is that the older farmers are probably long on assets, but they're short on labor. But the younger farmer is short on capital and long on labor. So that combination of the older individual needing labor and the younger individual needing capital, I think we capitalize on that. And so I appreciate you allowing me to make those statements. So now we get down to the real issues. Dr. Kaufman, you know, we've talked a lot about the extreme uncertainty in the global supply chain, as well as the rising cost of inputs, bureaucratic red tape. So I'm particularly interested in EPA's recent decision to threaten the access to some of these crop protection tools, glyphosate, dicamba, those kind of things. And I know this is not necessarily in your wheelhouse, but it probably comes into some of the discussion with producers. So you share any insight into how that uncertainty maybe impacts producers' decision-making, and if you will?
Yeah, thank you for the question. I can't speak to the specifics of the policy, the uncertainty around the EPA, but what I would say is just simply a comment on the anecdotes that we have received from producers that would reflect that idea that the volatility in those markets and the inability to secure inputs is of paramount concern, especially going into the fall, as many producers would be going into renewal season.
And so that ability to have, or that uncertainty adds to the inability to plan and look forward and so on. So it's really an asset when you can have your capital lined up and your inputs lined up.
Yes, I would agree with that. Certainly, being able to make decisions with confidence that you can secure the necessary inputs going forward is a pretty key part of the planning process.
Thank you. Mr. Brown, you have any comments in that regard?
No, I will note that we had a bit of a workaround last year as we saw fertilizer prices, chemical prices, seed prices climbing through the fall into the winter. So we had the opportunity to work around and prepay a lot of our input costs last year. This year, we don't have much of a workaround. We see fertilizer just a tad bit coming off its highs at this point, but chemicals, fuel is up 2 times over last year. So we're going to face the challenge of, do we lock in our prepays before the end of the year, or do we risk, locking those in the springtime and hoping that they've improved at that point?
Thank you. Mr. Tillman, your observation, please.
Yeah, I think that basically getting a comprehensive plan to adjust going from here to there is the key to all the success that you're going to have. You're going to have challenges as you go from here to there. So I think that reevaluating with the rise in cost and the expenses of everything, you basically have to revamp your whole plan.
Thank you. Do any other witnesses have any comments in that regard? We got about 45 seconds.
I would like to point out that one of the reasons that I believe beginning farmers are often doing things differently than our parents and our grandparents is to sort of mitigate some of the challenges that are happening, including becoming organic as a way of not having to deal with the potentially hazardous or unavailable inputs.
Thank you, and I thank our witnesses for their comments, and with that, I yield back.
Thank you, Mr. Baird. And now, the gentlewoman from Washington, Ms. Schreier, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Today, I would like to discuss some of the barriers that young, beginning, and underserved producers in my district face accessing credit. The 2018 Farm Bill made really nice strides to improve financial assistance for young, beginning, disadvantaged producers by increasing loan limits and set-asides. But farmers in my district still need help in order to access these loans and opportunities. For first-time farmers who often don't have generational knowledge, Mr. Baird alluded to that need for mentorship, or if they don't have comfort navigating a local USDA office, these loans can sometimes just seem out of reach. Accessing these loans and programs also requires substantial time and a high degree of business and financial acumen that new, beginning, underserved farmers might not have. And navigating a federal bureaucracy is daunting, to say the least, and certainly knowing how to get the necessary technical assistance for these loans and other opportunities is also really challenging. So, for example, when one farmer in my district looked into federal loans to help him buy land, he quickly came to the conclusion that the process was too tedious and strenuous to be worth considering, and he decided to use a private mortgage company instead. So what this meant is that he actually had to sell his house in order to afford the down payment on the land, and he used his personal credit lines to then pay for farm equipment. And that's a big risk. So for him and for others in my district, there's this pervasive sense that these programs are just not meant for them. So ultimately, there's this substantial unmet need for connecting farmers with the technical assistance that the USDA and FSA programs provide, particularly to ensure that these beginning farmers know what programs are out there, who they can talk to, and what assistance is available. Ms. Asherman, you talked about some of these challenges, and you talked about starting up your farm, and that your eventual success with the FSA was due to the right combination of persistence and good fortune. But your story also demonstrates how effective these loans are to get people started. Can you talk about how the USDA can better meet beginning producers where they are, to provide technical assistance and let them know what loans or what other assistance they can provide?
Yeah, I mean, I completely agree with everything you just said about feeling like the loans are just not for you. And so trying to decide, is it even worth applying for them? I think that, I mean, it would be nice if the process were simpler and if we could mitigate that issue, but I do think that it is possible, and the benefits for new farmers to get to that next step, whether it's buying the tractor, buying the land, that capital is so important for especially first generation farmers who don't necessarily have inherited land or inherited equipment. So while the programs are very difficult to navigate, I do think it's a testament to the success of them, and the intention of them is very important. And if I can just say, relating to a point made earlier about how do we move the needle on the average age of farmers in this country, I really think it's not just making sure farms can transition, it's also making sure there are new farmers who did not come from farming, that new land is in production. I think that is so critical.
That's really interesting, because we often talk about how we're losing that farmland. And so to be able to bring not just new farmers, but new land into the question is an interesting one. You know, I was going to ask also, you can kind of comment on whichever one you want, like the cumbersome paperwork and long processing times. If you could either talk about how the USDA could streamline this process, or talk about this leap. So many of the young farmers in my district are leasing the land, so they never get the capital needed to like buy the tractor and get a foot up. If you don't want to comment either on.
Yeah, I think that I see a lot of young farmers leasing because that is the easier thing to do. So in terms of getting started, getting access to the land, getting crops in the ground, getting cash flowing, leasing is so important, but it doesn't build long-term equity and it doesn't provide secure land tenure. So ownership is really important.
The lady's time has expired. And now the gentle lady from Florida, Miss Kamek, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to our witnesses for appearing before the committee today. As someone who represents a rural district with a lot of young farmers, this is a really timely issue. So I'll just jump right in. Mr. Brown, what was the process like when applying to multiple different loan programs at USDA? And specifically, can you elaborate on the inefficiencies that you saw during the application process? Do you think that the process itself could deter farmers from applying from the loans altogether? And I think we all know the answer. So if you could dig into some of the specifics, I would be appreciative.
Absolutely. Thank you, Congresswoman. So it's been a mixed bag for me. The real estate loan process went fairly smoothly for me, largely based on the joint status of the loan being between FSA and Farm Credit, as I mentioned previously. That helped smooth the operation because the communication with Farm Credit was extremely fluid and helpful in regards to understanding what I was getting myself into. Now, I have had 2 challenges with other USDA programs the Conservation Stewardship Program as we transition from one structure in our operation to another as a generation phased out. Kicked me out of a conservation program for a year and caused extreme frustration when I needed the revenue the most. And also the farm storage facilities loan. I didn't apply for this year because it requires 3 years of ag production history. The problem is with a young farmer, we're growing at such a rapid rate to keep up with competition. I'm expanding my grain storage to keep my costs on my operation down, actually. So I don't have to pay an elevator to store my grain. I'd like to store it myself. Well, I picked up some ground and had 1 year of history, but it was such a substantial amount of ground that I needed that grain storage available, and I wasn't able to access the farm storage facilities loan because I didn't have 3 years of history. So I would encourage that to be addressed in the future as well.
Were you finding that the levels of support were adequate?
Absolutely not. The problem is farm real estate in my area is explosive. You've got $20,000+ per acre land selling this year, which is up in some areas about 40% from last year alone. And also operating expenses are extremely high. So I don't use the operating note that's available through the FSA because the limits are unreasonably low for my operation.
And I hear that all over the country, but thank you for that. Ms. Asherman, as a young farmer yourself, what gave you the confidence and security to utilize the USDA loans and trust you would have the ability to access the credit to start your operation? Is there any way, and as a small government conservative, I always say repeatedly that we just need to get government out of the way. Specifically, what can Congress be doing in helping build trust with our new farmers?
I think, explain in my written testimony a little bit more detail on this, but I read the FSA website and I was like, ooh, this is for me. I meet these requirements. And then once I felt confident that I met the requirements, it was just, again, farmer stubbornness and persistence at working with my loan officers and chipping away at the process. And I honestly had no other alternative. And I had nothing to lose. So I was sort of at the point in my farming career where I was either going to stop farming because I did not want to be a tenant farmer any longer, or I was going to find a way to have my own farm. And if either of those, if I hadn't been able to find ownership opportunities, I probably wouldn't be farming today. So it was stubbornness, and I wouldn't say confidence, except for once that first loan process went through, I do feel now like I understand how to navigate the process. I'm more confident I can do it in the future, but that's, because I had that first experience.
Wonderful. Thank you so much. And with that, thank you, Mr. Chairman and Ranking Member, and I yield back.
Thank you. And now the gentlewoman from Iowa, Miss Axney, is now recognized for 5 minutes.
Thank you, Chairman, and thank you to our witnesses for being here. Very much appreciated. It's a really important topic, so I'm glad we're having this hearing. Since coming to Congress, I've certainly made it a priority to help our family farms. I'm a fifth-generation Iowan with family farm in my blood as well. Great to see our state next door being represented here, so I'll have some questions for you. But I've done a lot of things, from working to make sure that we didn't change the stepped-up basis that would really hurt our farmers, to securing disaster relief, to making sure that our operations can recover from the difficulties they've seen, and then, of course, addressing things like cattle market transparency so that smaller producers can actually get a fair shake. But we know that farming remains a viable option for many people, but not for a lot of our new farmers to get involved. And so, as been mentioned here, we know that the average age of a farmer is nearly 60 years old, and 2/3 of farmland is managed by someone who's older than 55. So as we continue to see these declines in rural population, and we need to make sure that this upcoming farm bill offers support for those who want to move to rural America and start a new farming business. And and I'm seeing this every day of the week. I see people who want to be out in our rural communities and absolutely want to farm. We know that the 2018 Farm Bill made some notable improvements, like increasing loan limits for FSA loans or establishing the Farming Opportunities Training and Outreach Program, but we've got a lot to do. And so, of course, I've heard the biggest hurdle is simply the cost of land. We've seen in Iowa, of course, incredibly significant increases in the cost of the land, and you may have heard that we, just last month, a farm in northwest Iowa went for a record $25,000 per acre. We thought we were big time. I remember about over a decade ago, and it was $7,000 an acre. We thought, whoa, my goodness, so this is something else. So, Mr. Brown, my question, I'm sure you've seen these similar trends next door. You're right next door to us in Illinois, and you noted in your testimony that you led working groups compiling recommendations on improving policies for new and beginning farmers, including that access to land. Are there some specific recommendations you can make to this committee so that we can get you guys onto the land when we're looking at $25,000 per acre right now?
I think, as I mentioned in my testimony, just keeping up with the rapid pace of change in agriculture is important. And you increase those loan limits in the last Farm Bill, they're going to have to be increased to be beneficial in this Farm Bill as well. Land costs will continue to escalate, in my opinion, and cash rents obviously are going to keep up with that as well. So even if a farmer doesn't have access to purchasing the land at this point, they're going to have access to their operating note because their cash rents are going to go through the roof as well. So I think we have to look at both approaches in the future because they're both going to be instrumental to our survival.
Thank you for bringing that up. And I recently just heard when I was out doing a roundtable, somebody say they're going to increase their rent. So they have to. There's just no ifs, ands, or buts about it. So thank you for letting us know we got to address both of those sides of the coin. Mr. Asherman, at a roundtable, Ms. Asherman, I should say, I held my district last year. A farmer relayed concerns that while these programs have been critical in helping many beginning farmers get started, they age out of them, and then they're stuck in the middle. Where they might not have the equity that older farmer has to, keep them established. So what can we do here in this middle world where we can develop some programs for our new farmers, but we've got those middle farmers who are falling off on a cliff when those opportunities stop for them?
Can you explain how they are aging out? I'm not sure I understand.
Yeah, well, the resources don't apply, the policy doesn't apply to them anymore. As far as being able to get the grants for new farmers. But they're like, it's kind of, just like a small business. Startup phase, then you move into the middle phase, you're trying to, farming is a small business. So you're trying to keep that middle ground running while you grow your business and you have lack of access to capital because you don't necessarily have a strong running farm yet. So it's that middle ground where they can't get access to the loans. They're beyond just the new farmers, but they're not up at that, 60-year-old farmer yet, and they're trying to make ends meet. What can we do for those folks in the middle?
I mean, I would say that the policy needs to change to understand that there's a vast number of farmers with different experiences and different resources. So some people will come sixth generation farm and they're going to have automatic equity in that land that they have that they're keeping afloat. And then some people are going to start with nothing. I feel like I was in the sweet spot between having experience and having the ball rolling where I was too busy to apply for anything, but I'm not sure.
So it sounds like something we should look at. Thank you so much.
And thank you. And now the gentleman from Ohio, Mr. Balderson, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you for this hearing today. My first question is for Dr. Nathan Kaufman. Dr. Kaufman, thank you for being here today. And my question is to you is, in your testimony, you talked about intensifying cost pressures that are being put on farmers. Despite these pressures, you say that agricultural credit conditions have remained strong. Cost pressures and access to credit are two major barriers to entry for young and beginning farmers. While these cost pressures are not having an impact on credit right now, do you anticipate that will change if the costs continue to rise?
I do think that the risks are elevated in part because profit margins have been so strong, and generally speaking, input costs tend to rise as commodity prices also rise, so those profit margins could get squeezed. It wasn't that long ago prior to the pandemic that we were in an environment where those profit margins were low, so there are some possibilities that those risks could intensify in the coming year.
Okay, thank you very much for that answer. If you didn't direct it that way, I was going to have you do a follow-up, but that's great, so thank you. My next question is for Ms. Asherman. Good morning, and thank you for being here. I want to shift to the topic of microloans. FSA's loan web page describes these loans by saying they are designed to meet the needs of small and beginning farmers by easing some of the requirements and offer less paperwork. Ms. Asherman, in your testimony, you shared your experience obtaining a microloan and stated that the process was nearly identical to a direct operating loan. Can you describe in more detail what this process looked like for you?
Yeah, I was really disappointed because I was busy and trying to take advantage of a microloan specifically for the expedited nature. Essentially, the documents that I had to fill out, which are all PDFs on FSA's website for this operating microloan, which was a $50,000 loan, what I actually ended up filling out were all of the same documents for the operating, the standard direct operating loan. So, I mean, just the exact same paperwork, and then my additional documents that I needed to supply, cash flow projections, yield history, yield projections, all of that was to the same detail and extent that it was for me to purchase my land, actually. And so there was really no paperwork difference for me last year when I was accessing a microloan. And when I asked my loan agent why that was, and I sort of, suggested that the microloans were supposed to be a less paperwork heavy process, they said that because I was already in business and I already had this documentation, that they were going to need it. So essentially, I felt like my paperwork burden was actually increased because I'm running a successful business instead of decreased because I have a successful business that I've shown I can repay a loan.
Thank you very much for that answer. And I want to do a follow-up, and I'll start with you. I want to be conscious of the time. We're down to pretty quick, but Ms. Asherman, I'll ask you first since you're already right here. What changes to the microloan process or the FSA loan process in general do you think need to be made to make these loans more accessible for small and beginning farmers?
I'm not sure what the paperwork should have been, but I think it seems like an implementation process problem, at least at my local level. The concept seems great. I just don't know if it happened the way it was supposed to on the ground.
Okay, thank you. Would anybody else like to add to that? Seeing none, Mr. Chairman, I yield back my remaining time. Thank you.
Thank you. And now the gentleman from Florida, Mr. Lawson, is recognized for 5 minutes.
Thank you, Mr. Chairman, and also Ranking Member Mr. Thompson, and welcome all of the panel to the committee today. My first statement is centered around what Ms. Ashman mentioned in her testimony, that the high cost of student debt is a major challenge for new farmer generation when accessing credit and building capital, especially for young farmers of color. Ms. Ashman, can you talk more about the value of higher education was to you and other young farmers, in addition to your believing that federal forgiveness of student loan debt for young, beginning, and underserved producers would be beneficial in your work, and what could this forgiveness program look like?
Yeah, I mean, I definitely feel like a college education is a really important thing for all Americans who want to have it. It's where you become yourself and you identify what you want in life, and it gives you important skills. I definitely think that going into farming with a bunch of student debt would make it very difficult to succeed, if not even start. And to me, it just seems like philosophically, farming is so important and it is such a sacrifice, and farmers work so hard and for so little reward, that there's an opportunity to incentivize the new generation of farmers to go into farming when they maybe didn't come from farming, by offering relief for student debt. It seems like that could dovetail really well with rural development, because I do think there are people who want to live in rural places, and I do believe rural places need more people who are motivated to work there. So to me, it just seems like there could be an incentivization to help make people choose farming. And I think it's worth asking the question, why do a lot of farmers, current farmers, not want their children to go into farming? And I think the answer is because it is so risky and so challenging. And by going into farming, you're essentially potentially going to go without a lot of basic things that most people get from their jobs, from their employers, safety nets. It's just very hard to choose it. And so there needs to be ways of helping people to choose farming. And I think that would be in the best interest of our country and in the future of food security.
Okay, and Ms. Davy, I would like for you to, because of your work at Alcorn State University and I have Florida A&M University agricultural program, I'll ask you to comment on that. But I first want to say is that the chairman last year, we provided scholarships for students to help attract students to stay in agriculture, especially historically Black colleges. And so I would like to see if you want to comment in this area.
Thank you for the question. As a matter of fact, the law students that are traveling with me this summer providing estate planning services to heir property landowners and Black farming communities, they were just learning about that program that is provided through the HBCUs and in a partnership with USDA. And they said that they wish that they had learned about that because there's so many careers in agriculture that don't require being a farmer in particular. But I definitely think that the education, a college education gives any small business owner an advantage in navigating all of the bureaucracy and all of the financial planning and business planning that's required. I think that even though farming is a generational industry, you don't generally wake up and decide to become a farmer. It's usually something that you've inherited through the previous generations. But because of the widespread race-based discrimination that Black farming communities have faced, there has been a tendency to discourage the next generation from going into agriculture. So I definitely think programs like those and partnerships with the HBCUs that can incentivize students to pursue careers in agriculture, as well as getting the opportunity to have their student loan debt forgiven, that would definitely make a huge difference. I know for myself, even as an attorney serving Black farmers, those grants that are available for serving as an attorney in those communities it was very beneficial to me to have student loan forgiveness connected to that. So I would echo that recommendation.
Okay, thank you very much. And I know I'm getting ready to yield back, but that program is really working. That the chairman fought for so hard over the years. And I had a nephew to come out of that program and currently working with USDA. Mr. Chairman, I yield back.
Yes, and thank you both. Mr. Davy, you hit it right on the mark. That is one of the reasons why we fought very hard. And now we are making that scholarship program permanent, and we are adding $100 million for the 1890s land-grant college scholarships at these schools. Thank you for recognizing that, and thank you, Mr. Lawson. And now we have the gentlewoman from Connecticut, Ms. Hayes, who is also the chair of the Subcommittee on Nutrition, Oversight, and Department Operations. You're recognized for 5 minutes, Ms. Hayes.
Thank you, Mr. Chairman. And thank you to our witnesses for your testimony today. An overwhelming majority of farms in Connecticut's 5th District are small and family-owned farms. Property costs are rising across the country. The national farm real estate value averaged $3,380 per acre in 2021, up 7% from 2020. Beginning farmers in my state are at an even bigger disadvantage. In 2021, the farm real estate value in Connecticut was an astounding $12,500 per acre, the 4th highest in the country. Ms. Asherman, I appreciate you sharing your story about starting your own small farm, which is similar to many of my constituents. Would increasing the cap on direct farm ownership down payment loans and counting those loans toward credit history help beginning farmers today, in your opinion, and through your experiences?
Yes, I mean, I think that having FSA loans contribute to credit history is incredibly important, especially if you want, if USDA wants farmers to also be able to outgrow some of these programs and be able to stand on our feet with traditional farmers. I definitely think that would be helpful.
Thank you. And I noticed that we heard from several witnesses and also Mr. Tillman in your testimony. You pointed out the lack of the pre-approval process for FSA loans slowing down the startup for beginning farmers. The process to obtain a loan can take up to 6 months, during which time a farmer could lose their opportunity to purchase land to non-farm entities with access to commercial lending. We've seen just how tight the real estate market has been across all sectors. So I would imagine that it is equally as tight in the farming sector. Mr. Tillman, how often do you see farmers losing opportunities because they are kept waiting for a loan to much larger entities who have direct access to capital?
We see that quite a bit. We have a issue with timely transactions of the applications. A young lady in Norman wanted to basically start a business and needed a loan. It went on for over 9 months. So each time that she located some land before she could close the contract, she had to go do another one. So those are just some of the tactics and issues that basically young farmers have in getting into things. But in Oklahoma, at this particular time, the land is so extremely high, you know, based upon new investors and certain types of businesses that are moving into Oklahoma. It's basically put it at a position whereas that a farmer has to really put everything on the line just to secure the land. Not only having to go through the process of getting an operating loan, enough to basically functionally carry all the liabilities that come with that. And one other thing that basically is here, that when a farmer, we're talking about cow-calf operations, get into that, the livestock indemnity program, which is a part of that, and based upon all the weather conditions and things that we basically have in Oklahoma, there are a lot of things that occur, whereas that the inventory of the liability is lost, and there's no way to recover, and the FSA wants you to have pictures and everything like that, but that needs to basically be addressed in some other kind of way that we can identify a way to clarify that this guy had this number of cows at this time. After the storm, he didn't have this many cows. And so that's an issue I'd really like to have on the record there.
Well, thank you so much for that, and I want to be respectful of the time, but I'll ask one last question if you could submit it, anybody on the panel. I'm particularly interested in how Congress can reduce barriers for underrepresented farmers, for young BIPOC minority farmers. I'm from a state of Connecticut. Not all of our farms are on large land. We have fish farmers, we have small urban farmers, we have just some really creative things going on in the state that have not been accounted for in this industry. So anything you can offer in that area for how Congress can help, I would appreciate it. With that, Mr. Chair, I yield back.
Yes, and please do respond to Ms. Hayes in writing, because she's on to a very important point, and we appreciate you responding your recommendations in writing to Ms. Hayes. Thank you. And now, the gentleman from California, Mr. LaMalfa, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Apologies for being out of the room so much, multiple committees and this, that, and the other, but I'm glad to be able to take part here at the end. So I want to focus a question on rising interest rates. For Mr. Kaufman, please. We're just in straight terms, the borrowing power of producers at this point. What does that look like with these interest rates? What's your opinion on especially for entry-level folks getting into agriculture, when they might have to go pretty heavy on the borrowing in the beginning to secure equipment, land, inputs, et cetera?
Yeah, as a general comment, what I would say is that those farmers who are in most need of financing and maybe have the least amount of equity would then be most exposed to some of those increases because of the amount of leverage. I would say that generally speaking, those interest rates are still quite low in a historical perspective, but they have been rising. And so it does represent an increased cost burden. I would say that it's not necessarily been the most significant comment about the concerns that we've heard that have been reflected more on input costs, fertilizer, and chemicals specifically.
Mr. Brown, as a producer, would you want to touch upon that a little bit too?
Absolutely. I would say rising interest rates are an issue for us as far as cash flow goes. That's probably my greatest pressure point on my balance sheet right now. I've got a lot of pretty strong ratios. I've built up working capital in preparation for these higher input costs, and I'm squirreling away as much as I possibly can. But higher interest rates, if I were to take out real estate loan or continue to use operating money, could create a cash flow issue for me.
Well, how's the price of land looking as far as the return on investment for, I mean, I'm a farmer in my real life too. Northern California, we farm rice there, and the price of rice ground because of California's, it's not even realistic if you were just to walk in, especially as a young grower, and try and get a loan on that and get a return. What's that looking like in your home state as far as the production versus costs to service, buying land?
Yeah, it doesn't pencil out right now. Land prices currently are up 40% from last year in my immediate area. Cash rent is quickly following. There's a lot of cash rented acreage nearby.
Right. Cash rent's probably pretty high too.
But yeah, if one were to purchase, it would not pencil out in the long term at $20,000 an acre.
So it really, what it looks like for me at home is if you're not part of already of a farming family and have that momentum, maybe going back to land from the 80s or the 50s or 40s or whatever, I just don't see how a person comes in at an entry level. Yes, you're going to pay cash rent for a while, and maybe you're going to make some money at that. We'll talk about that a little bit.
I think it's extremely difficult in the current environment. Me as a young farmer, I'm preparing for an eventual downturn, and I'm hoping that I have the cash reserves there to strike at that opportunity. In the meantime, it's all about relationship building, relationship with your landlords, relationship with your vendors, to get everything priced as fairly as possible.
As a fellow farmer, what should we be focusing on in Washington, D.C.? In my notes here, we're talking about, we hear a lot about, it's Russia, it's the war and all that, but I also look internally at some of the things we've done to make things cost more because we're not producing energy. What's your view of that from your field? And what should Congress be doing?
Energy in particular?
Yeah.
Is that your question?
American energy?
Well, I take a look at what's going on around me, and there's a huge push for solar, and there are a lot of wind turbines popping up in central Illinois. My concern is good ag land is going out of production to facilitate some of those operations. And I myself, I have solar panels on top of both of my machine sheds, so I'm not against solar power by any means, but I think we have to be cognizant about the long-term impacts of taking up some of the blackest soil in the world with solar farms and wind energy, and every decision we need to make should be for the long term.
Yeah, Mr. Brown, same thing in California. We have some of the most productive ag land in the San Joaquin Valley that is being covered, and they're aggressively, the state wants to buy land and take it out for habitat because the water doesn't get from our storage to the fields these days, from our tremendous federal and state storage systems. It's not anymore. We're taking hundreds of thousands of acres of land out. I like to tell people, what we don't plant now is what you don't eat next year. It's going to be something else. You see food prices now. Anyway, hang in there. God bless you. Thank you, Mr. Chairman.
Thank you. And now the gentleman from Illinois, Mr. Rush, is recognized for 5 minutes.
Certainly want to thank you, Mr. Chairman, and it's been quite an interesting hearings so far. And Mr. Chairman, I want to start by asking a question of Ms. Davey. Ms. Davey, you have a very curious and insightful perspective that really tantalized me, where I'm a descendant of black farmers in the South, and the stories that you shared with us today are certainly a special interest to me, and they continually demoralize me and add an emotional pull on me, and it's around the issue of black farmers and the challenges that they face, both obtaining and retaining land, which is really kind of traversed. This problem has been an existing problem for most of our nation's history. And we all, I don't want to recycle or restate that history, but we on the Ag Committee have a special and unique position to try to help solve the problem of loss of black farmers in our nation. And I think that we need the political courage, the will, and the understanding that unless we deal with the issue of the loss of black farmers, then we are not going to be able to solve the agricultural issues in their entirety for the rest of the nation. Can you kind of share with us what this loss of black farmers actually represent as a loss to our nation's wherewithal, our nation's well-being, and how we are failing our nation's citizens by allowing these atrocious increases in black farmers over the last couple of decades or even more than a couple of decades in the last half century.
Going all the way back to the enslavement of the Africans, there was a particular expertise that who are now known as African Americans brought to the field of agriculture. And so the expertise of agricultural production, of anticipating weather changes and managing those businesses are very, very critical resources that have educated many farmers, not just within the African American community, but even during the 1980s crisis, there were a lot of efforts by African American farmers to share with other farmers who were underserved about some of the ways in which they were able to navigate the US government, as well as staying in ownership and possession of their lands despite many institutionalized attempts to dispossess them of that land ownership. And so the increasing loss of African American farmers from our agricultural system is a devastating tragedy to all farmers because of that wealth of knowledge, but also in particular for the African American community, that loss of wealth, estimated in excess of over $300 billion, where African American farmland is lost. There's a significant loss of not just Black wealth, but American wealth. And so it's a very important issue that we address, maintaining the existing African American farmers that we do have, but also incentivizing relationships for the next generation of Black farmers so that they can be those first responders for their communities. Black farmers are the first responders. We saw throughout the COVID crisis that in their communities, they were still feeding and providing for their communities' food. And so we really think that it's important to make specific investments in Black farmers because they are extremely underrepresented. They continue to be underrepresented even in programs that are set aside based on socially disadvantaged farmer status. There's been ways in which African Americans farmers have set the foundation for many of the civil rights that we all enjoy today. And so it's imperative that we address this issue.
Mr. Chairman, I don't think I have any more questions, so I yield back.
Thank you, Mr. Rush. And now, ladies and gentlemen, we have reached the conclusion of the hearing. And I just want to say a big thank you to each of you. Your testimonies were so helpful. And we will look forward to continuing this dialogue. And you could tell from our committee members how seriously we're taking this issue. As we know, it falls in our domain here in the Agriculture Committee to see about our agriculture business, to make sure we are foremost and first in the world, quite honestly. And this is so important. So I want to thank you, Mr. or Dr. Nathan Kaufman. Thank you very much. Miss Dania Davey, thank you for your help. And Miss Julia Auscherman, thank you so much. Mr. Willard Tillman, thank you for your excellent testimony. And Mr. Adam Brown, thank you. You all were very helpful. This is a continuing process, and we're going to make sure that we have a firm foundation for moving forward with the next generation. But as you see, it's going to take us staying on this case and making sure we get the help out there to our beginning farmers. And now with that, I'd like to turn it over to the ranking member for his closing
Very good. Well, Chairman, thank you. It's been great to work with you in this hearing. Thank you to all of our witnesses, those that are in attendance and those that are attending virtually. American farmers are facing historical challenges. Increased interest rates, they're just now starting to go up. Increased input costs, a lack of access to crop protection tools, lack of affordable energy, diesel, propane, gasoline, 9.1% inflation as of this week and growing. These are compounded for young, beginning, and farmers, and are young and beginning farmers and are underserved producers. We access to acreage, access to credit that has been the focus of this hearing. So given the average age of American farmers at roughly 57 and a half years, for America to maintain food security, we have to address each of these headwinds, including facilitating efficient access to credit for young, beginning, and underserved producers. And with that, once again, thank you for being a part of this, and thank you, Chairman. I yield back.
And thank you, Ranking Member. And now, under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional material and supplementary written responses from our witnesses to any questions posed by a member. This hearing of the Committee on Agriculture is adjourned. Thank you.